Dare County Audit Committee meeting to order. Rob Ross with the ho-ho-ho hat. Festive for the season. We have everyone here. Richard Bateman, Teresa Osborne, Sally Fossey, Ernie Bureau, Dave Clausen, and County Manager Bobby Allen. So we are ready to commence. And shall we begin? We have the audit results and comprehensive annual financial report deck prepared by finance team. Should we follow that? Do we have minutes to approve from prior meeting? Is that better? It was pointing out toward County Manager Outen. Thought he was going to project, but that is not the case. So there we go. All right, that's working. Should I defer to you, Dave, to start us?
If it's okay, how about we let Ernie go first?
Okay.
Do a quick recap of what he's doing over the last quarter.
Yes, and you should have in front of you a sheet, one-page sheet that says 2021 first quarter update. And briefly, just won't read all of it, but just some of the highlights from the first quarter.
Before we get going, I'm
Yes.
looking for my sheet, and I'm not seeing one, Ernie. You have one, Teresa?
Yeah.
Did I put something on top of
It's
it?
okay, no worries. Okay.
Oh, yes, there we go. All right.
All right, so item number one, we just continue to work on the P-card audits, and during the first quarter, there were 49 of them completed. We found no major findings in the audits themselves, a couple of small things that we've taken care of, but nothing of any significance. Item number two, I continued and started again the internal cash audits, and we did 6 of them during the first quarter: the Manteo Parks and Recreation Office, the Manteo Library, the Detention Center, the North Beach Health Clinic, North Beach Environmental Health, and the Game and Wildlife Commission. What I wanted to note on this matter is that this is the second time now I've gone through the audits with the offices. Found no findings this time go around. There were recommendations made last year to each of them, or several of them anyway, for some suggested changes to strengthen their operations, and I'm happy to report that all of them implemented those changes and are operating in compliance with the county's internal cash handling policy. So I was very happy to see that. Item number 3, entered 23 budget transfers and 16 budget amendments. In July, we completed inventories at the Fleet Maintenance Warehouse and the Collington Water Maintenance Facility location. And as with last year, there were no significant findings at either location. And David had asked me that perhaps for this coming year, we would add the Buildings Maintenance Warehouse. That's a parts warehouse we have there for the buildings maintenance operation. I have not audited that yet, the inventory there, but we'll include that in the round of audits coming up for 2022. I worked with Shanna Fulmer completing an equipment replacement plan for large sanitation vehicles, hopefully allowing us to provide for updating the fleet over a 10-year period. We'll be looking at that in conjunction with the budget coming up. Also worked with Sharon Flatt from the Transportation Office on the completion of several grant reimbursement requests she submitted. One thing that's taken up a good bit of time over the last, actually 6 to 9 months is completing monthly updates of our COVID expenditures. We have a number of grants we've received, and each of them has different reporting requirements. So I've been trying to keep track of expenditures in the different line items and making sure that we have the necessary documentation to get the required reimbursements back. And then finally, with respect to the new animal shelter, David had asked me to prepare some expense projections for the coming year, and I worked on those as well. So that's it in a summary, kind of hitting the highlights of the first quarter. And if you have any questions, I'd be happy to answer them.
The animal shelter operating expense projections, who did you work on those with?
I worked with the Buildings and Grounds folks. I also talked to a number of different animal shelters around our area to get an idea of some of their operating expenses and costs on heating and things like that. And just talked to Matt, of course, Hester from an IT standpoint, and touch base with a number of members of staff to try to come up with some accurate readings.
Was Chrissy Rothrock involved at all?
I do not recognize that name. Is she the director?
Yeah, of the
Okay.
animal
I
shelter.
sent her an email originally about that. Did not hear back from her. I wasn't sure if I had the right email address or not, but no, I did not speak with her.
My only reason I ask is if there are operating expense projections, I would have thought she would have been kind of actively involved in that.
They're just for the new building.
I don't understand.
IT cost, estimating utility cost, estimating propane.
Electricity.
Buildings,
Run.
strictly building related
What the
operating.
new building's gonna cost, because the new
Okay.
buildings always cost more than the old ones.
Okay. Good.
And the other thing in the information that I handed out, and I think David might want to speak briefly to this. We, of course, in the finance office from time to time, and unfortunately on a, seems like a more increasing basis, have fraud attempts of one way or the other. And there are two that I included paperwork on that give you a little bit of an idea of a couple of attempts that Anna Gallup in our accounts payable department kind of caught and stopped an attempt to fraud attempts. And I don't know if David wants to talk more about that or not.
Well, just quickly, just so y'all know what's going on. Sally, how many times a month do you think it happens?
Here lately, I would say at least once, maybe twice
Yeah,
a month.
between payroll, somebody trying to imitate an employee, to change direct deposit information. And now it's people imitating companies trying to change electronic payment information. So the one with the yellow highlights, that's the email that came into AP imitating a Barnhill contracting company with the correct address and phone numbers. But if you look down at the very bottom, instead of barnhillcontracting.com, it's bamhillcontracting.com. And that's, they go in and create bamcontracting.com, create the domain name, and use that as the email for themselves. And it always comes in the third week of the month because they know pay applications are done at the end of the month. And by the third week, we're ready to process the next construction pay app. Then the other one was A.R. Chesson that's doing Health and Human Services. And even on that one, you can see they, I don't remember, Matt. Oh, man, there it is. They did archesson.us instead of archesson.com. And Matt traced it down to the domain name was registered. There was an address in Gilbert, Minnesota, using a fax number from a mining company in Gilbert, Minnesota. They even faked a bank letter from Wells Fargo and then hand completed the ACH form to change the payment instructions. The sheriff got contacted back on this one, of that Gilbert Police Department, and they succeeded over 200,000 with a large city in Minnesota intercepting a construction payment. So it's kind of audit related, but really just to let you know, this stuff is going on all the time. And there's just more and more of it.
I'm obviously very happy we were able to detect and stop. How did we detect it?
Well, yeah, with this stuff, I think the smaller you are, the better it is, because we've only got one AP clerk. We've only got 3 construction projects. And we talk about this all the time and make sure everybody's aware. If this was Charlotte, I could see something slipping through like that.
So on the A.R. Chesson one, it's regards Lisa Euler. I presume that's a boat.
That was actually an A.R. Chesson employee that passed away 5 years ago. So somebody really did homework.
But we have put some standard procedures in place for changing bank account information. We don't ever just
Right.
accept it
What?
over email or phone call. We actually call the contact that we have in our records at the company and speak with someone. And for the big construction contracts, we're now including that in the contract
And it could only be changed by a change
by
order.
change order. And for employees, we make them come in person and fill out the bank information. We will not accept that through the mail, by fax, anything. They have to physically come to HR.
Right. A lot of bad people out there, aren't there? Well, obviously, guys, great. I'm glad we did that, caught it and spotted that. I mean, geez. Unbelievable.
Well, I've traded emails with somebody before pretending to be Bobby, trying to get me to pay an invoice.
He knew that was a lie, because I'd have walked down the hall. to tell him that.
Exactly. Well, good. I'm glad we caught that. Thank you. Sheesh. And did you say that the actual people in Minnesota behind the Chesson deal were apprehended?
No, they traced it to the same domain name and email system where they intercepted a construction payment. It was a big city in Minnesota. So they succeeded at least once.
They did succeed at least once. And again, we have no idea, law enforcement has no idea who they
I don't
are.
know. We turned it all.
Yeah,
over to the
again, not that
sheriff.
we would be pursuing, but would have been nice to hear, yeah, they found these folks and apprehended them. So just set up and keep doing it. Oh, boy. Okay. Thank you, Dave. Okay, well, thank you, Ernie.
You're welcome.
Okay,
Okay, on the audit report, this year was obviously different and different for auditors, but we got through everything. They had to add some additional work, but, everything's been done. It's been turned into the local government commission, the state treasurer's staff had, it was just a program description, comment change in the auditor's letters. That was it. We've got everything done and formatted. We went ahead and posted it on the webpage. It's been given to the Underwriters Council for the preliminary offering statement for the bond sale in January. And I filed it with the GFOA about 15 minutes ago. So we're finished except for the board presentation on Monday.
if I may, I'd like to just read from the Comprehensive Annual Financial Review. It's page 13, and it is page 2 of the letter from Potter and Company. The financial statements referred to above, that would be the Dare County financial statements, present fairly in all material respects the respective financial position of the governmental activities, business type activities, and the aggregate discretely presented a component unit, each major fund, and the aggregate remaining fund information for Dare County as of June 30th, 2020. Thank you, guys. That sentence is a very, very important sentence and a powerful one. So I just wanted to acknowledge it, call it out, and express my appreciation for a job well done on that.
Well, you have the whole presentation that's, I'm going to do Monday during the board meeting, but I'm just going to hit the highlights. And
Sure thing.
They're very small, but in the bottom right-hand corner, there are slide numbers. So on number 2, this year, the threshold for a grant program being major was $750,000. So if it was $750,000 or more, you have to test it.
Say that one more time, Dave. Don't.
The threshold for audit testing for a grant program,
Yes.
750,000. If it's 750 or more, they have to test it
Yes.
as a major program, or because it's major. We had one item in the audit letters that is identified as a material weakness, and that's because the capital projects fund ended the year with a negative fund balance, and that's because we'd already started the animal shelter and health and human services, and COA got delayed a bit because we were originally planning to issue this debt in June, and now it's January. So as soon as we issue the debt, that negative fund balance goes away.
Right, that's, you can see that on the CAFR on page 32, the negative 1,796,981.
That's right.
Yeah,
That's right. There were no grant findings and no question cost. And every year, I think I'm going to jinx this, but the last time we had a grant finding was 1996. Then on slide 3, the grants they tested as major on federal programs were Medicaid, FEMA, and the CARES Act. You also have to test state programs as major, and those were Medical Assistance Program, which is Medicaid, the State Disaster Relief, which is the state match to the FEMA relief, and then the Shallow Draft Navigation Channel Dredging Fund, which was the state appropriation for the dredge loan. On slide 4, we had 7.6 million, almost 7.7 million of federal funds flow through the county and 1.955 of state funds. We were not on the state auditors list this year. And I'm saying that more for you guys to remember that every year they select a sample of local auditors to do grant testing for the state audit. And we weren't part of that group this year, but every time you are part of that group, your audit fee, the county or the town has to pay the extra audit fee. So when we do get selected, it'll be anywhere from $2,500 to $7,500 more.
unfunded mandates.
Yes, sir.
Gang of people threw some tea in the harbor one time because of that sort of stuff. All right.
This, I want to flip all the way over to page 9. And this is a chart that Bobby and I spent time on this week during 3 rating agencies presentations. If you want a quick picture of what happened in Dare County for fiscal year 20 and after, this is the one to look at. So before COVID, through the end of February, sales taxes, the local was up 5%. The statewide Article 40 was up almost 8%. Occupancy tax was up almost 3%, and that was after Hurricane Dorian. Land transfer was up 14.5%, registered deeds 14%. Those will kind of go along together. And then we had the county kind of shut down middle of March through the middle of May, and by the end of May, almost all of those numbers were in negative territories compared to the May of the year before. Then by the end of June, they had almost recovered to where the sales tax, local sales tax was down just a little bit, almost flat. The state was up 4%, occupancy was down 5%. Land transfer was almost flat. But then if you look in the next to last column, fiscal 21 to date, what's happened from July 1st through the end of the period indicated on the right, as compared to the prior year.
What period was
Well,
it?
the
July?
one to the right, so for sales taxes, we have numbers.
Oh, I see. September, October. Yeah,
September.
yeah.
And then occupancy tax, we have numbers through October, and then land transfer and registered deeds, we have through November. The sales tax is locally 12%, occupancy 25%, land transfer tax 90%.
Whoa. Land transfer up 90% over the same period last year?
Yes, sir.
Wow.
It's a boom out there.
Wow.
And then going back to fiscal 20, on slide 10 underneath that one, the general fund, and that's the consolidated general fund, which includes general capital investment, disaster recovery funds. That gained fund balance of 2.4 million. The inlet maintenance gained fund balance of almost 10 million, but that's because of the state appropriation for the dredge loan. Because the way we have to record it on the books, it'll be a debit of a loan receivable and a credit side is fund balance. And then the insurance fund, again, $1.1 million to the good.
And the time period for this slide number 10,
Sorry, fiscal 20.
this is fiscal year 20.
Right. And then on slide 11 for the general fund, again, the total fund balance increased by 2.4 million. And under our new board policy that the board adopted in June, which is
I'm sorry, Dave, let me pause you one more time. This is the consolidated general fund,
right,
and you did indicate that that included disaster relief.
disaster recovery.
Recovery.
And the capital investment.
Say again, disaster recovery.
And the capital investment.
Got it.
So your board policy changed as of June, and under that policy, well, let me back up. Our unassigned fund balance was 27.9 million. It's 26.94% of unconsolidated revenues, which is the policy. And that policy is 21% of unconsolidated revenues. So we ended the year in very good shape with that. Then slide 12 shows you why revenues were under budget, 2.7 million. The only categories of revenues that were under budget were other taxes, sales taxes and occupancy tax together. And then the category we call sales and services, and that was because of home health, hospice, and EMS that were all around $400,000 or more each under budget. And that was directly because of COVID. What saved us was the expense side. As soon as March came, Bobby told everybody, if it's not a essential expenditure, if it's discretionary, don't make it. If it's not an essential position, don't fill it. And then we saw, if you were Parks and Rec or the Dare Center, the Bomb Center, or EMS, and you weren't having programs and you weren't going on calls, you didn't have the related expense also. So on the expense side, we were $7.5 million under budget, 7.5%. That's what enabled us to actually end the year in the positive. And then the next page, slide 13, just shows you the history of the fund balance of the insurance fund. So as 2013, we're over $4 million in the negative. That is now about 2.5, just over 2.5 million to the positive at the end of 20. The water fund, what we call change in net position, which is really net income, was a negative 638,000. And that sounds bad because water is full accrual, and what's causing that negative number are the other post-employment benefits expense and the pension expense. We got hit really hard by the state this year on pension. I mean, investment returns are down, and well, I will be quiet about that. But what you can look at for water are the coverages down at the bottom. Now, water was affected by COVID. At the end of June, their usage was down 3%. They've since recovered. That if you go from March 1st through the end of last week, it's in the positive. But we had projected coverage of 2.36 times, and we had actual 2.01, and the year before was 2.2. And that's coverage is required to be calculated by revenue bonds. It's really your cash coverage of annual debt service. And that's the number that places like rating agencies will look at. There's a big discussion going on with bond attorneys and finance directors. Are do you run your water fund for coverage purposes, or or are we changing so that we're trying to cover full expense, including OPEB and pensions? So yet to be resolved. The rest of it, I'll just leave with you unless you have questions. It's covering, well, I don't think there's anything else in individual funds. Disaster recovery, we have $1.3 million of fund balance now, which is above our 1% target balance.
Where did you move to, Dave? You're moving
Um,
quickly here. I'm
yeah, I
not
was-
tracking with
Didn't
you.
know if there was anything worth discussing. If you go 2 pages back on slide 17 is disaster recovery. We've got fund balance in there now of $1.3 million, which is just above the board policy, which again, the policy adopted in June was 1% of the general fund budget because the state declaration level is 1% of your general fund budget. So if you don't get a FEMA declaration, you can still get a state, but with the state, damages have to be at least 1% of your general fund budget. So if we have less than 1% of our general fund budget, we don't get a declaration and all the costs are ours. So we're making sure we've got that much in a fund balance.
And again, just for maybe my benefit, this disaster recovery fund balance of 1.3 million, again, I'm on slide 17. It's there for what specific purpose?
For example, well, for 2, whatever local share we end up having of a declared storm,
Right,
which there's always things that they don't pay
right,
for. But really, and it's happened before, say if we have a hurricane that hits only Hatteras Island, say Hatteras Village to Buxton, and there's no other damage in the state, and we don't hit the FEMA damage levels for declaration, and we don't hit the state damage levels for the declaration. All that cost belongs to Dare County.
So again, I'm just trying to clarify in my mind the distinction between this specifically designated disaster recovery fund balance or disaster, and the unrestricted general fund balance, which we referred to earlier at 27,926,000.
Right, so this
The goal.
comes out before that number. This comes out before that unassigned fund balance.
Right,
Because you've committed it to something else.
The goal is to make it untouchable for other purposes. So
Right.
if you've got it folded into your regular fund balance and there's some project, goal, idea, thought, whatever that the board decides, that's the pool of money you use to pay for it if it's not in your budget and it's above what's in your contingency. What we wanted to, and then you have to decide if you're going to go below your policy levels and all that as you spend that fund balance money. We wanted to have a place where we had money that was there for a storm, no matter what, so that it wasn't to be touched to do something else with. And by designating it, it gets it out of the way, if you will, and it's there and we know what it is. It's easier to track all those kind of things.
so in practical terms, if we had a storm and let's say that our cost because of lacking FEMA threshold or whatever was 2 million, not 1.3, we could draw 700,000 out of that unrestricted general fund balance, supplement this 1.3 and cover the total 2.0.
Correct. If a situation occurred to do that. The idea would be that if it got above that 1.3, then likely the state would kick in
Yes,
and we wouldn't need more than what we have in that fund.
right. Okay, I understand.
Right.
Got it.
That's right. Then the other thing to note in this next slide, 18, the E911 fund, that fund balance went down. Well, I didn't put it on here. Over $500,000 and it now stands at 480,042. But that is because last year we didn't get any 911 money from the state, because the year before we had transferred over the fund balances from Terrell County, 345,000, and Hyde County, 252,000. And the state only wants you to have 20% of your expenditures in fund balance in the 911 fund. So they didn't pay us anything in fiscal 20 to purposely make that fund balance go down. So starting July, we started getting, July 1st of this fiscal year, we started getting paid again by the state.
Just for the, you say the state guideline was 20% of annual operating expense,
Yes.
and is the 480,000 about 20 over more than 20?
Still over, isn't it?
I'm not sure.
I think it's still more than 20%, but they went ahead and started paying us again, so.
We raised enough stink, I think.
We- Bobby and I have been there several times.
We had fund balance that we created on purpose because we recognized that you're gonna have equipment repairs, you're gonna have things that you're gonna need to do out, and we were essentially saving for those things. And so the state typically pays for your operating costs and some of those things, and they use a 5-year average. Well, if you use a 5-year average, when those times come and you need that big chunk, the 5-year average won't give you enough money to cover those things. And they can't they either can or won't understand that, because they will not allow you to have that fund balance, and they required us to spend it down to whatever the levels are they require before they would give us the operating money that they normally would give us annually anyway. And so we've done that over.
Teresa, you should place a phone call to your contacts and put some pressure on that.
for you.
And so, that's where we are now. I'll tell you their reasoning. Their problem was other places were just accumulating fund balance with no plan, and they were using up all the state money, and they were saying there's no reason for somebody to have a big fund balance and us pay them too when they're not using the fund balance to do anything with. But we had a plan, and it was all designated and everything for it, and that didn't matter. They just threw the baby out with the bathwater. So our planning and our efficiencies didn't count, and so we paid it down.
Yeah, I understand.
That's where we are.
I understand. Okay, that's helpful. Thank you.
Yeah, the only other thing I have is the next slide on 19. We've got this irrevocable trust fund set up for retiree health benefits. And the return for fiscal 20 was 4.16%, and our average annual return since inception, which was 2009, we've averaged just over 8% return a year.
How much of that is our liability? What's the percentage of that to our liability? I didn't look at the CAFR.
That is 2% or less.
If you call that a liability.
Teresa does.
Only way it's a liability if we cease to operate tomorrow.
Exactly.
Are you familiar? I'm looking at Irvin. Are you familiar with what they're talking about here, Irvin, on this post-employment benefits liability?
I do not.
Take a moment, just explain, Bobby, if you would, because this is a little bit of a fabricated, not a fabricated, but it's more of a phantom liability, I think, than a true liability. Why don't you describe that for a moment, Bobby?
So we have retirement benefits that we pay after retirement, and so they go out and they get paid. And we pay them on a cash basis each year in the budget. And for accounting purposes, they establish rules that say your future liabilities, your future pension plan costs are liabilities. And while that would be true if we were a private company that would risk going out of business tomorrow, we are not. And there's almost no way the county's going to cease to exist or cease to pay its bills. And so even with that said, they're treating it as a liability for reporting purposes, and they're saying that you have to have a plan to cover that liability, if you will. And they don't tell you how much you have to fund it or any of that. So we started a plan and we fund it, not heavily, but we meet the requirements. And so that's where that number has come from over since 2009.
Mhm.
It's invested and it sits there. And should we cease to exist tomorrow and still have future pension liability, then we would have a place to get some of that cost to pay those future liabilities. But the reality is we're having money that's sitting there that really we can't use for anything else and isn't doing anything because we're not going out of business tomorrow. So that's what it is. Now, that may be a very simplistic view and the accounting people may look at it differently than that, but
No.
that's,
I
that's
think
the
that was a
reality.
great explanation.
Yeah.
Yeah, I understand it. Yeah.
Great.
Thank you.
Right, and it calculates the liability for all of your retired employees, plus all your current employees for all of the future that they can project out for and say, if you had to set aside an amount of money today to pay all of that stuff for as long as it lasted, that's the liability.
Now, it could be that 30 years from now or something, as we do it, this fund has grown enough that it sort of becomes like our insurance fund, an endowment, if you will, that would then cover our annual costs because you have a lot of money. I don't know how long that would take. I've never tried to figure that out, but it would take a while at the rate we're going now. And it's not a goal because it doesn't do anything except tie your cash up for a long time.
And there's no requirement to set the cash aside. It's just a reporting requirement. So
Correct.
we've gone above and beyond by setting some aside.
It does help with the discount rate to lower the liability calculation, and it helps a lot with the ratings people.
Right.
To have it there. Those are the only items I wanted to know. It was no new, thank goodness, no new GASB requirements to implement as opposed to, did you see that next year for 22, so it means you have to have it available this spring. There's a new GASB requirement coming in for leases. So your lease payment isn't your expense anymore. You've got to go through a separate calculation to calculate what the expense is. And they told us last week, you've got to budget the expense and not the payment. Yeah, I laughed too. So,
Most of the
It's
ones that I
good.
do are so small, it's going to be immaterial, but
there you go.
I feel bad for you.
Yeah, what does that mean in practical terms to us with this GASB change?
I don't think we can answer that yet.
Whole bunch more work.
Well,
More work.
it means that we're gonna be asking somebody that we gotta have another piece of software to calculate it. Which we've started working on.
Well, good job to y'all for getting your audit in and getting it approved, because they did give an extension till January. So great job getting it in and getting it approved this early.
Thank you.
Was lots
We
going
even-
on.
We even turned it in and they said we had to wait an extra week before they'd approve it because the final CARES Act audit guidance wasn't out yet for last year.
Slide 21, Dave. If I could just take a moment on that. We were, for a number of years, hovering right around 18, 19% of debt service as a percentage of our expenditures, and it has obviously declined as we continue to pay down principal on, I presume, the limited obligation bonds.
That's right. And in the prior periods, it was so high because of the school debt that was issued between 2002 and 2007.
Right. And when we fund in February, that is our target date, right? For the next bond issuance, I think
Yeah, the
it's
closing date's February 1st.
February 1st. That percentage for 2021 will go back up to something higher, I presume?
I have not looked at that in the model. If it goes up, it won't be by a lot because of other debt service. If-
Coming off?
Absent that coming off, because absent the new issue.
That
you
would
see
go down
line
further.
Keep going down.
Keep going down, okay. So 2021 will be somewhere in that range.
14,
And
15, maybe, yeah.
yeah, okay,
And
Okay.
this chart's a big one with the rating agencies also, because they look at whatever that line is something that you don't have the ability to change in your budget. And the higher that percentage, the worse it is.
sure. And again, I'm looking at the other ones, next charts, to just for interest purposes, to my own interest, maybe you guys too. The personal property slide or chart on slide 23. Bumping at 440, what does that mean?
It's in millions, so in 2018, personal property within the county was 360 million. At the end of 20, it was 440 million.
Hmm.
And it's the same type chart for vehicles beside it. If you go
Right.
back 10 years, there was 320 million vehicles registered, and now it's 490 million.
Okay. Food stamps, how would one interpret, again, this is more interest for us and me. How would one interpret the slide on page 24 on food stamps?
The yellow is the number of households receiving benefits, and the green is the number of individuals receiving benefits. And what we saw back with the recession, our increase in social services activities kind of lagged the recession. So our highest years were 2012 and 2014. So what you see going down after that is actually coming out of the 2008, 9, 10 recession. And you can see a small increase for fiscal 20,
Mm-hmm.
likely related to COVID.
Right, that makes sense. And, okay, just looking at the last two charts there on page,
Numbers are in billions.
right, right.
See, and yeah, taxable retail sales did take a small hit for fiscal 20.
As expected.
All right.
Okay, good. Well, thank you. Good summary. Good, obviously good audit, good results, good, solid financial position. Anything, I went through, obviously, the CAFR, looked at a number of these items, worked my way through definitions for government-wide statements, fund statements, the general funds, the government funds, the unconsolidated and consolidated. So it's a long and winding road, or they can be a bit confusing. But I came away very, very comfortable with where we are with our conservative and responsible financial management, fiduciary responsibility of handling funds. I don't have any concerns or items. The only one I did not fully understand was, as I mentioned earlier, the negative balance of 1,796,000 in the capital projects, but you've explained that as a timing on the issuance of the bonds, so that is answered and resolved. I didn't have anything else. Anybody else? Shirley, Teresa, anything?
Do not.
I do not either. No?
I'm good.
Okay. Anything else from Sally, Ernie,
No, sir.
Bobby? All good?
Did you want them to do the?
I was looking for the minutes. Were they here as well? I didn't.
Yeah, I got them right here. Motion to approve October 5th, 2020 minutes.
I'll second that.
Let me just scan it for one moment. Okay, good. All in favor? Aye. Okay. With that, I believe we have completed business for this audit committee review. Motion to adjourn?
So moved.
So moved. We are adjourned. Thank you all.
How you been? Restaurants closed, I can breathe, relief. Expensive time. Yeah, that's good. Not a whole lot of activity, but I'm gonna take them. I'm gonna go and spend some time. Yeah, I know.
Who knew?
You and I talked.
And that looks,
Who knew back in March it was out for turnout?
my little house down there is rented. It's crazy.
Gallery.
It's rented 3 weeks in this month, in December. And I've got the first week in January, and I told Teresa, I said, you need to go up there around, we need to book the first of January. We're not gonna get out every day.
Did you really?
Yeah. Good to see you.
Yeah, good to see you.
I think we looked at it separately and said.
Good to
what were
see
the
you.
dates? Hey, likewise.
Take care. See you, Dave.
Christmas,
Bye.
thank you.
Yeah.
Yeah, I mean, circle back to basically the same kind of thinking that we were doing.
He said he'd have something next week.
That's excellent, that's excellent. I don't know why I didn't have the minutes, I didn't have the earnings
What
presentation.
are you doing? You still just blazing around?
I put everything over here. I thought you were sitting here and then I had to move
You
it.
just go down to overpay for the holidays?
No, it's rented.
Duluth.
It's rented all through this month, so I'm going down the first week in January.
Go where?
First week in January.
So you just go hang out at Fort Ridge?
Hang out in Poor Ridge. I ain't going anywhere.
You get to see Jonathan?
Yeah, he's home.
Yeah.
Yeah, thank you, Derek.
We're gonna hang out
They
there
called
and
Derek
just
there and told
eat some good fish and,
How's this stuff, business going with COVID? Track it, or
huh?
did COVID hurt his business any, or is he? I thought he had a business out in the or somewhere.
Wow.
It didn't hurt it too much. He had carpet business, yeah. No, they're good. We just found out today, we had a friend that owned Ruth Chris Steakhouse, him and his two brothers. One of them died. We found out 4 days ago, he had COVID and died last night.
Whoa.
Did he have, was he obese or?
No.
They were busy?
Listen, worked out, ran, it was crazy. I mean, they
Oh,
just
come on.
positive.
It is a respiratory inflammation that causes subsequent failure of other organs that leads to death. And typically, if you are in good health, that respiratory inflammation never reaches that level.
My buddy Frank told me this guy, he worked out with this guy at the gym and he said they ran and
That poor guy that plays basketball for Florida. He had COVID in the summer, I think it did something to his heart.
wow,
Did you see that? He just fell.
I know, that was bad.
Wow.
He's talking, he's awake and conscious.
Oh, yeah, I did see that story where he just, yeah, I did see that.
I'll see you guys Monday. Y'all be
Okay.
good. How's your bride doing? She on the mend?
It's a long, slow, yeah, she's stable, she's okay. I was able to leave her today, but
You
it's.
won't see me
we got a
after
long road.
Monday night.
Well, guess what?
This was
You
an
won't see me
experience I
either.
wish on absolutely no one.
we didn't have Monday night, you wouldn't have seen me Monday.
This is just catastrophic. So many ways, but yeah, thank you for asking. I will, thank
Cool. All right, you gotta be good.
you. Okay,
So you're,
Made it hard to hear. See how it comes out.
all right, you got your key, you're all square.
I've got my key.
I'm only gonna lock that small office room.
That's right, that's right, that's right.
You have a good weekend and I'll see you on Monday.
I will see you on Monday, yes, sir.
All right.
Thank you. And Bobby, your presence is noted and welcomed at the audit committee. Thank you for joining.
Hands apply.